Hi guys, we are back with Diwali through Diwali series, and today we are going to discuss stock number 23. The company which we are going to discuss today belongs to Gas Pipeline Infra and City Gas Distribution. The company's name is Likhitha Infra. My key investment thesis for Likhitha Infra is the increasing demand of gas pipeline infra in the country, the city gas distribution channels, and the national gas policy of 2030. Company is expanding geographically and having a consistent business and order book as well. Before we go further, there are 22 stocks which we have discussed in this series. The links are present here. You can do it in your free time, go through the links, understand the thesis of all those businesses as well. So coming back to Likhita Infra, the company is almost 25, 26-year old company and it is into the business of pipeline laying business, and it is also doing the operation and maintenance of those oil and gas pipelines. It also undertakes city gas distribution projects, tankage, and operations. It is based out of Hyderabad. Company has done two joint ventures. One is CPM Likhita Consortium, and another is with the Haq Arabia Contracting Company, which has become the subsidiary of the company right now. Company has laid over around 1500 kilometers of the steel pipelines and 1500 kilometer of MDP of oil and gas pipelines. So this shows the potential of the company, the caliber of the company, the quality outputs. Now the company has planned to lay approximately 1000 kilometer of pipelines for the ongoing projects. Company is the first one to execute the transnational cross-country pipeline as well in 2019. Company has a presence in almost 20 states and 2 union territories of India. Coming to the business segments, the company is divided into four parts where they are focusing on the city gas distribution, cross-country pipelines, operation and maintenance, along with tankage. So tankage here, it is the construction of the fuel depots like storage tanks, combined station works, civil works, those kind of stuff. In the city gas distribution, they are laying the steel and MDP pipelines for consumer across domestic, commercial, and industrial sector. As the growth of CNG stations and the CNG pipelines are increasing, this is a good business segment to be in. Coming to the strength of the company, company has a long-standing relationship with the marquee customers. It has an efficient business model. It has strong project execution capabilities in the past. Company's presence is across 20 states, which is diversified. Strong technical qualification to bid for the project. Strong association with the clients like GAIL, IOC. Strong promoter holding more than 70%. Company is having a strong order book of 1,500 crores in June 2024. The current run rate of the company is around 400 plus crores. So we have a visibility of next 2 to 3 years as well. Company is having a highly experienced management team. The promoter itself is into the business from around 3 to 4 decades. The credit facilities of the company are A or A1 in the short term, so which is very good for the company having only 1500 crore market cap. This is an excellent credit ratings as well. Coming to clientele, company has a strong association with GAIL, ONGC, IOCL, even with the IOCL, Adani Gas Pipeline Limited, IGL. So all the major clients are big customers like Torrent Gas, Haryana Gas, so BPCL. So all the major players in the country have been associated or are the clientele of Likhitha Infra. Coming to fundamental ratios, as you see, company's market cap is around 1500 crore. P is around 22, which is not very expensive. ROC is excellent, beyond 30%. ROE is beyond 20%, which is also excellent. There is nil pledging, nil debt to equity, and the free cash flow is also good over 5 years. The company has stable OPM. The profits are going like 33 times in 10 years. Sales has increased 11x in 5 years. It has a consistent profit growth, sales growth, ROE over 3, 5, and 10 years, which is very, very, very good. Promoter has sufficient skin in the game at 70% shareholding. So overall, the company fundamentally looks sound. It has a great past. and overall the numbers are looking very good fundamentally. Coming to triggers, why we are studying this company. So there are certain macro trends. India is trying to target the increase in the share of the natural gas in the energy mix to 15% from the present 6.7%. And as per the government policies, the number of geographical areas in India have been increased to 228, which is spreading over across India, 27 states and union territories. And these initiatives have provided lucrative opportunities for the oil and gas players. Again, another policy moves, which is including the wide-scale rollout of CNG and the expansion of gas infrastructure, including LNG terminals, long-distance transmission pipelines, CGD networks, that will help to drive 30 billion cubic meter of gas demand growth over the next decade. So as the country moves away from the coal and oil, the gas will take the center stage to some extent. Again, the switch to CNG from coal in the India's brick industries is also encouraging greater gas usage. There is another policy which is also coming where there is a mixture of the biogas into the normal gas as well. So the things are moving in the right direction for the gas pipeline across the country. Again, India is set to dominate the number of pipeline projects that are going to happen in next 5 years, and this is considering the whole Asia. India is the country which is going to dominate for this project. According to an estimate, 43% of the projects will be coming in India for this. So the total pipeline length would be around 30,000 kilometers, which is to be added as per the analytics company. So there are plans to connect the states with also gas pipeline network, as well as the government of India is trying to hit a big numbers on pipeline. So we are on track for this. In terms of investment, 41,000 crores are expected from companies to build the natural gas pipeline structure. This is a big number considering the market cap company has, considering the sales, which is only 400 crores. If we get only 5 to 10% of this whole pool of 41,000 crore plus some percentage from the above macro picture, then this company is going to go places over next decade. Only thing we have to be careful about is to have a bigger picture for this company. We may not be able to get the successful returns in the short time frame, but if we are keeping the horizon a little bit longer, like 3 to 5 years for this company looks very solid, fundamentally as well as from the growth perspectives. Now, company has also been entering the new markets like Saudi Arabia and United Arab Emirates, where they are forming a joint venture. So the potential of oil and gas exploration in these countries is also increasing. Along with that, India's energy consumption is also on the rise, and this company is in the right place. Till last financial year, company has an order book of 1,600 crores, which is the major part of which is coming from the city gas distribution. Now, last quarter results, company was having a pending order book of around 1,500 crores. Current sales is around 400 to 450 crores. So that means we have a very good visibility over the next 3 years. Company has in the past successfully completed the big projects, and even recently the company has got major orders from GAIL, BPCL and HPCL. So the order size is also increasing, which is very, very encouraging. Coming to technical charts, so we see that company has hit recently the highs of 500 almost, and it has come down from the top almost 25% down and trading around 370, 380 mark. So if we see, the volumes have also been dried up, and the previous surge in the prices come up with the volumes. And if we get this company around 300 to 400 range and keep our horizon long, I think the breakout possibly might happen by the next 6 months. I'm expecting the movement will be there, and Likhitha Infra as well. Coming to risk, this company is struggling with the large working capital requirement because the cash conversion cycle is high, going beyond 500 days. Trade receivables and inventory is also on the higher side. So this needs to be monitored very, very carefully. Any change in the city gas distribution policy could impact the company's growth. So company may also struggle with the rising raw material or commodity cost in the long run. Along with that, companies deriving significant portion of the revenues from the oil and gas companies. With this segment, if it goes down, it will hit the company harder. Along with that, company has a government clients. Specifically, if you see all the refineries, all the gas players have been attached. So the cash conversion cycle may not be easy to come down for the company. Apart from that, there could be increase in competitive bids as well because a lot of new players are also jumping in. So overall, I feel this company has a potential. It has proven its worth in the last decade. The numbers are pretty good, not expensive. I feel it's little bit undervalued if we consider 3 to 5 years horizon. Only thing is, do we get it around 300 to 400 to build our base? So currently the price is under that range. We would like to get it maybe a little bit more cheaper. I am holding already from the IPO time frame and I have added in between as well. So this sounds to be a very promising company for me. Please understand the thesis before you put your money and please let me know your feedback about this company. So I will be back with another company in 2 weeks, talk number 24, then we'll meet again. Bye.